Afternoon guys, today we're going to take a look at none other than the NASDAQ 100. And if you are new to the channel, a sub would be appreciated, as I do provide valuable educational content on a daily basis. And if you enjoy the content, please smash the like button for the YouTube algorithm. And as always, let me know down in the comments below exactly what it is that you would like for me to cover in my next video. Now we're going to start with some technical data, look at some fundamental data, and then look at some order flow data. Unfortunately, the sentiment data for the NASDAQ 100 is not available to the public. Now starting here with the technical data. Now starting on the monthly time frame, firstly we can see how the NASDAQ had printed this level of resistance. The market broke above that resistance, support did not hold. The market then melted all the way to the downside, printed this equal low, and we saw that massive pullback in the market after rejecting that previous low level there in the market as well. Now what I normally say is that when the market is trading above a structural level, there's always a good opportunity for the market to continue higher. However, that's basically just from a technical perspective. But if you look at the fundamental data, there is a high possibility that the NASDAQ might not move to the upside. And also, if you see a candle like this with a long wick, there's always a good possibility for the next candle to go and fill in the wick, because that wick that you see in the market over there, this is normally just a retracement on a lower time frame. Now that we're on the weekly time frame, what do we have? Now, from a weekly perspective, we can see the NASDAQ had printed this information. Now, after the information, you expect a pullback to the neckline before the continuation to the downside. Now, that is exactly what the NASDAQ 100 had done. Printed this equal low from a technical perspective. The market printed this equal low, then completed this information, went back for the retest of that structure that we had over there, because that wick is included of that structure. And once again, we can definitely expect more continuation to the downside. Now here on the daily time frame, what do we have? Now from a daily perspective, we got some we've got what we call a contradiction between the weekly and the daily. Now from a weekly perspective, we're looking to sell, but on the daily time frame we can see how the market had printed this level of resistance over here, and this resistance now got broken, and the market will come back to test it as support. So the best way for us to approach the situation from a technical perspective, firstly, is to wait for the market to pull back into that level and then potentially look for continuation. Also, after the market printed this impulse, we always expect a correction, and the way you measure that correction would be to take your Fibonacci there from the low to the high. We can definitely expect a 50% pullback, which gives us a 50% retracement of this massive impulse. Alternatively, if things doesn't go according to plan, we can definitely expect the market to drop below that level and then come back for the retest of this structure. In doing so, the market would then print this head and shoulders pattern, which would then be considered a bearish pattern in the market. And from where I'm sitting now, I think it's quite interesting to see how the market reacts once it hits this 50%. After it hits this 50% pullback, are we going to go see the market go up, or are we going to see a break of structure? Well, that's something that we can speak about once the market had reached that price. Now, if we go over and look at some order flow data, so the commitment of traders, so what the big banks, hedge funds and institutions are doing, we can see a base of last week's report. Hedge funds came in, and after adding 12,000 buying positions, they actually closed only minus 684 buy positions, and they also started closing their sell positions. The overall net positions had decreased by about 104, so we can definitely expect the NASDAQ to still continue slightly lower before going higher. Now, if you go and have a look at the fundamental data, so we had Facebook earnings that came through, and this report from CNBC tells us that Facebook shares plunged more than 20% on weak earnings. Big forecasts were missed. Now remember, Facebook weighs about 7% of the NASDAQ, so that is quite a substantial negative impact for the stock itself. It says here Facebook earnings came in below expectations for the fourth quarter, and the company said numerous challenges are ahead in the first quarter. They also say that inflation, supply chain disruption at advertisers and user uplifting to products that monetize at lower rates are among the key issues the company faces. that also says here revenue in the first quarter will be between 27 billion to 29 billion, while analysts were looking for that number to top 30 billion there as well. Now, we also have Amazon earnings coming through tonight, and it says here from GeekWire, Amazon Q4 earning preview. Analyst is expecting a record revenue of 137 billion, lower profits. Now, I don't care what the analysts are saying. I will wait for the data to get released first. Amazon also weighs in at 6.7% of the NASDAQ 100. So this is going to have a substantial impact on the way the NASDAQ 100 could move after the news has been released. So the best way for us as traders, we have to be reactive and not predictive. But before we go there, I want to speak about the data that came out for the US dollar today, which is the ISM services, the PMI. Now, if you don't know what the PMI is, the PMI is basically a survey report on businesses, manufacturing, and services. This report measures business activity overall, economy, and anything above a 50% indicate growth. And if you see anything below 50%, you know there's trouble. So the previous was 62, the actual is 59. The forecast was 59.5. So because it's above 50 and we're still keeping it above 50, it shows that there's continuous growth within the US dollar, and I'm not sure how that works there as well. And also, what we saw yesterday was the guy from Shark Tank, Kevin O'Reilly. He came in and he said that before Facebook actually revealed their their earnings, he was one of the people that said no. He bought a lot of Facebook stocks. Unfortunately for him, Facebook started tanking after that. After the earnings report came out, we can see how the Nasdaq also took a nosedive there slightly yesterday, also in line with technical data as well. But coming back to the PMI data, that basically tells us that the economy is still doing good. I still don't understand how or why, but things are still looking good for the US dollar. We're just waiting for the interest rate hikes to start as of as of March, and then we'll see exactly what had happened. But for now, this is how you guys can approach the situation over here. And then the best thing you can do is once the price hits this level, you can then start monitoring the price from a daily perspective. If you do get a clear break below this level, then there is no more playing with put the Nasdaq. We can definitely expect the market to continue lower. But ladies and gentlemen, that's all for now. Try to keep it as short and sweet. And as always, if you enjoy the content, please smash the like button, share it with your friends. Sharing is caring, because each one helps one. And the only time you look down on someone else is when you're trying to help them up. And as always, cheers for years.